Good evening, everyone. Today is October the 12th, Thursday, 4 p.m. Pacific time. Hope you all are having a good day. Wanted to quickly run through the stock of the day, but before that, just a quick summary of the markets. NASDAQ, essentially after a 4-day run up because of a hot CPI number, came in a little bit higher than expected, which means there is a likelihood of another interest rate hike. We actually had a down day, 0.6%, about 85 points down. If you look at the S&P 500 as well, took a little bit of a breather, about 0.6% down, 27 points to 43.49. And then the Dow Jones Industrial Average also took a little bit of a breather, I thought, 200 points, about 0.5%. But if you look at the NASDAQ, actually, the interesting part is it's still within the high-end range. So I'm not very concerned. This is the stocks are never going to go up and to the right consistently without a problem. And there's still a little bit of choppiness. As I've mentioned throughout, be cautious because we're still not out of the woods. We're still not in a completely, from a macro perspective, we're still not completely out of the woods. And from an earnings perspective, given that this quarter is going to be okay, overall in terms of the S&P 500. Starting tomorrow, the banks will report. So JP Morgan, BlackRock, and Citibank, and a few others, Wells Fargo, and so on. So wait for the bank earnings to wrap up next week, give you a little bit of a better sense. But I don't think you're going to get very great earnings. You're going to get good earnings, but not great earnings, which means the necessity for the market to go up is going to be a lot more than just decent earnings. So still be cautious. That's what I'm doing. One of the stocks that popped up on my screening today was Coursera, a stock that I've been following for a long time. You've seen me mention this on Twitter for quite a bit. Hitting a 52-week high range, 1956 is the high range, so it's very close to its 52-week high. Thought let's just take a quick look at what's the reason why and see if we go through a 5-step process. We always almost start with the financials. That's where I end up going through anyway. Income statement on an annualized basis. The company did about $184 million in 2019, 60% growth, 40% growth, 26% growth. So it's been slowing down dramatically from 60s to 40s to 20s. So it's doing roughly about trading 12 months, about $579, $600 million, about 60% margin, 60 to 70% gross margins. Not a bad place to be. More gross margins have been improving a little bit better. So their pricing power is probably a little bit better, but still negative in terms of income. So they're still not making money. The company is valued about $2 billion, doing about $4 billion. So roughly about 3-something X, almost 3 billion, sorry. So they're doing about 5X to 6X in terms of revenue, but because they don't have profit, they don't have any earnings, PE to speak of. So revenue has been growing on a quarterly basis, 24%, 23%. So it's been actually a little bit up and down, but still in the 20s. And they've had a decent look at how they've reduced from the 50 million down to the 30 million in terms of their net loss. So should look okay as they continue to do. The balance sheet has got very little long-term debt, almost about $1 billion in assets. So from a cash perspective, they look okay. They don't have a lot of liabilities. So I would still be okay with this. No red flags coming up. And if you look at the valuation, which is the last thing to look at, the price to sales is about 4.9, almost 5 times price to sales, which is for 16, 17%. 21% growth actually is what they're showing, but between 21 and 25% growth, that's pretty high. Gross margins are nearly 50% actually, and a negative 20% net margin. So not great in terms of fundamentals, but no red flags either. So we always start with, now that we know this, let's start with the long-term perspective. So the stock went public. Let's see, this was in 2021 April, shot up that day on the day it went public. And since then, this has been a rough ride. So look at that. It went all the way from, I'm going to move this to the right so it becomes easy. Went all the way from here, level 4 down, just didn't even form a base, just kept going down. Then did a little bit, I would say it's still in consolidation zone more than anything else. So this, I would almost call it almost this much being in the consolidation zone. And now it's breaking out of that consolidation zone. If you want to call it, you can even call it till here technically, but it's right now breaking out of this consolidation zone to a certain extent, or coming out of the consolidation zone. Let's further see, because it's from a nice bottom. So another way to look at it is to look at this and say, okay, here's one end of that, and here's the other end of that, and look at the nice bottom that is formed. So usually this means it takes a little bit of time and it has to break out. So I'm looking for a breakout on the very high level. So it's formed a nice bottom. And if you look at the weekly chart, it doesn't give me a sense that it's completely gone out of the bottom. I don't see any red flags, but at any time, I'm still not convinced that this is going to go dramatically higher, but they had good earnings. So let's look for that. Let's see what drives that. So this is one of the points where you might get a good next 24 might be a good next run for the stock. Of course, depending on whether earnings were good, which we're going to go through in a little bit. So that's the resistance and the support. I think there's been a bunch of support even in this range. If you look at it, this has been the zone of a lot of support for it on a touchback. So 12. When we get to the daily, we'll probably see support which is a little bit more tighter than the 12 to 24 zone, which is a large zone. So good strong base, trying to break out on the long term, but still within the zone, 12 to 24 zone, in fact, 12 to 18 zone. All right, so if you look at the daily chart, we've drawn a lot of things right now. So I'm going to remove the base, knowing that this has been in a base for a long time. So it's actually been forming a nice base, which is what we know, did a good run up. Okay, so that's the reason why. And you look at the after earnings, they had a good candle, a good green candle. So surprised on the earnings, did very well after earnings, formed a nice tight flag. Look at that green candle after that red flag, and then just consistently has done a very good job. And then over the last few weeks has been consolidating in this range. And now today seems to want to break out. Hasn't broken out yet, wants to break out. So this has been a good run as it is from the 12.96, even if you will. So I'm going to update the bottom support. It's not going to go past, it has to go past this first for it to get down to the 12s. So this becomes the new support. In fact, one could even argue that the resistance previously becomes a support. So this was the resistance. So technically, you should be able to get much better support even in the 1644 zone. And then because the resistance has been even in the 52-week high range, so 1956, it's trying to hit against the 52-week high. This is not an all-time high, but a 52-week high. So this could be a potential resistance, but really, if you look at it from a even longer-term perspective, there's a bunch of resistance even here in the 1997-20 range. So let's keep it at the 20 range. 24 for sure, but the 20 range. So it's got a room to go from the 1881 to the 20 without a problem, which I think it should be able to go fairly easily. And then the real resistance is in the 24 zone. So how would you play this? Earnings are coming up in a couple of weeks, actually, 31st of October. So end of this month, that gives you about 15 days. How would you play it to earnings? You look at the last earnings, very good green candle. And then to the next earnings, it's gone up nearly about, let's say, it went from the 12. The last earnings, it was at 10 and moved up all the way in the next earnings to about 13. That's probably what it's going to do, which is what it has done here already. So I'm not expecting the stock to do phenomenally well, but it'll get to the 20s before earnings. 2 weeks, it should get to the 20s, probably move around a little bit over here, get to the 20s. And then depending on how earnings pans out, it would either take a new high from there because it's done a very good job from the last earnings. This is what you got to watch for. This is what I think was very, very good for one of the guys that talks about it consistently, about our earnings gap, if you will. After earnings, the last earnings, and the end of the last earnings, its high of the day, if you will, or the close of the day was 1531. And in 3 months has gone from 1531 to 18, almost $19. So $4 move, which is a 30% move. Very strong, very good move just after good earnings. So regardless of even if you had bought it here, it is still done very, very well. So look for companies with very good earnings. Wait for the stock. This would have been the best place for you to be able to buy it in the 1473. It's cleared this round. So this is risky because it could have had bad earnings and would have gone here, but it's had good earnings. Wait for it to come back and retest somewhere in this range, the 15 range. After it retested, look at a couple of tests and then heads higher, hold it all the way through the end of earnings, and then probably sell it somewhere just before earnings. You've gone from $15 to about $19, $3 to $4 gain on a $15 stock. 20-25% is nothing to sneeze at for about 3 months. So that's the way I would have played it. Thank you very much for watching. Please hit the like button. I really appreciate it. Share and subscribe to the channel, and I'll see you guys tomorrow.